Bitcoin has three catalysts coming for it that I can't see how they don't massively make this market go crazy. Number one, an ETF approval. Mike Novogratz says his sources are telling him that it's not a question of if, it's a question of when. And that sometime in the next 6 months is likely that when. The second thing is a major change in the way Bitcoin can be accounted for on the books. Basically, the Financial Accounting Standards Board is updating its rules to allow Bitcoin to be marked to its present value. Now, for those that aren't a chief financial officer, you don't often think about these things, but Bitcoin was previously classified as an intangible asset, which means if the value does well, you couldn't reflect that on your books. But if the value decreased, you would have to reflect those decreases. So if you bought Bitcoin at 50,000 and it went to 20,000, you have to reflect it on your books forever at that 20,000 or less price if it goes even further down, even if it then goes to 1 million. And this made it so chief financial officers didn't want to touch Bitcoin on their books, because even if they made a good bet, it couldn't be reflected on the balance sheet. They would have to put a lot of explainer pages in their filings, and a lot of people don't read those explainer pages. And so this little accounting change is really a very big accounting change, and it should be reflected in the rules soon. The FASB, or Financial Accounting Standards Board, decided back in 2022 they were going to go this way, but they have yet to line it out in their rules. Number three, we have the Bitcoin halving come up next year. And every 10 minutes, new Bitcoin are being minted as a reward to miners. That mining reward will be cut in half mid next year. It is going to be an exciting time coming soon. Now, how soon? That is hard to tell. But today we get to take a look at the price action of Bitcoin, of stocks, the general markets that also affect crypto, and then we'll dive into altcoins as well. Welcome to the Crypto Rain channel and our family. If you're looking for crypto news without context, or you're looking for panic selling and FOMOing in, you can find that in a lot of other crypto channels, but not here. If you, like me, came to crypto because you realize the potential for life-changing gains over a 4 to 8 year period and are looking for discussions on becoming a solid, unshakable crypto investor, you're in exactly the right place and the right family, the Rainmaker family. Now, the reason I created this channel is because I was once new to crypto 6 years ago. And back then I was looking for a crypto channel and network or group that understood crypto as an investment and discussed important things like investment cycles and projects, the pros and cons of those projects, the risks, the guesses, the upside if it came together well. And I didn't find the kind of discussion I was looking for. So we created it. And I say we because it isn't just me anymore. It's a family of Rainmakers, and you see them here in the chat. You will see them in our free Telegram group. The link to that is below. You will definitely find them in our private Patreon group that allows you access to the Rainmaker private Discord, which is where the best info is. There are other benefits too, but you will have to join it to find out. Do note, I'm not a financial advisor. Paul joining us today is not your financial advisor either. We are investors ourselves. I'm a crypto investor. Paul invests in many, many markets, and you will see that reflected as we look through some of the other markets that impact crypto. If you haven't already, make it rain on that like button and strap in for the show, because you know it's Wednesday, and that means we're joined by Paul from Definity. Paul, thank you so much for joining us.
Yeah, it's great to be here. And yes, you know it's Wednesday, except when we do it on a Tuesday, which we are doing it on a Tuesday next week. So
yeah, next week it is Tuesday.
It will be Tuesday. So I'm traveling. So very kindly, you've agreed to move the date. So thank you for that. So yes, it's but it is Wednesday today, very much, and it is live. So hello to everybody who's watching live, and hello if you're watching this in the future. What we've got at the moment is these August markets, and they come around every year, and we got the sense that we were moving into these August markets at the end of July, of course, we would be moving to August. But what I mean is that the nature of the price action seemed to indicate that volumes were dropping, and stranger moves happen around this time. But I think what you were saying at the top of the show is absolutely right about the big picture. We are in a very interesting period, and it reminds me of the period just before the big bull trend, when you had a lot of people who were coming out of the market. They'd got a little disillusioned with it, and we were talking about how you need a long-term strategy pretty much in whatever you're doing, but definitely in this space where you have to go through these periods where not a lot goes on, where things go sideways. It's frustrating. Just remember, it's got to wear the other guy out quicker than you. You just got to be mentally sort of prepared for it. And after a while, you just come to accept that there's some days when we will be sitting here going, there's so much to buy, I don't know which one to buy. And there's some days when it all looks, very much of a muchness, and it's much harder to pick something that looks good. But the main sort of drivers are still there. Now, I promised last week that I'd have a look at the presidential cycle of 4 years with the halving, and I did do that, and I did get a chart, and I managed to somehow not save it. But so I don't know where it is. It's on my system somewhere. I'm not going to mess about with it now, but I'll show it again to you next week. But the main point is that you can see that obviously that the two things are coming together. There is the cycle and the halving of Bitcoin are on the same approximate 4-year cycle. And next year, I think the halving is going to be about April, May, whereas of course always the election is in November. Mm-hmm. But interestingly, that period, and it's whether it's just a coincidence or whether it's by design, but that period is usually one where the market gets excited anyway. So you've got these two things coming together, where the halving's coming, the presidential cycle is usually where money gets spent. We get all the difficult interest rate rises out of the way, and then all the pain gets taken. There's something to remember. There's a really interesting psychological I don't know whether it's a trick or whether it's just a fact, but if you've ever read the book Thinking Fast and Slow, because market's all about psychology. If you've ever read that book, I think it's in that book that they did all sorts of tests on people with sort of working out how much they want to take a profit against how much they fear taking a loss, and all those sorts of things that are very relevant to us in the markets, but for them it was just interesting experiments about how the mind works. But one of them was that if somebody goes through a very painful period, let's say an operation, let's say it's a tooth extraction or something like that, I don't know, whatever you want, which is really bad, but the last period is pleasant, they rate the whole experience pleasant, or much more pleasant than if it's all pleasant but the last bit's bad. So what it tells us is that we are very much sort of weighted and sensitive to that last part of whatever we're dealing with. And I wonder whether the people who are sort of managing the economy and working out when to shift these interest rates around for political benefit, and you might say they should all be independent, and let's say they are, but let's say they might not be. Let's say there may be some influence. Let's say it's not going to be zero. It's going to be something. That would be a good way to play the interest rate cycle if you wanted to sort of get it out of the way now, sort of put all the pressure on inflation, load it early, and then as interest rates start to come down, and as we go into next year, you can't say 100% on anything, but it looks very, very likely that the economy around in America and UK, Europe, everywhere will start to look really good. So things will start to be moving up aggressively, and we'll forget about all the pain that's gone on, and we'll be forgetting about because the market's memory is very short. If you remember, it wasn't that long ago we were talking about the debt ceiling and all sorts of other problems, and they all seem to be forgotten. I know I'll come back to that, but there was a lot of comment about how can you be so bullish? The market's higher than when we were talking about that, and it has come off a little bit because you can't expect a market to go up in a straight line, but it's still not bearish. The way I see it, it's not bearish, and looking more and more bullish each week. So once we get this, this month out of the way, and the market starts to feel that interest rates are even going to pause, which they're pretty much definitely going to pause, but starting to go down, any hint of that, maybe they don't want that until next year because they don't want things to look too good until they're closer to the election. But I don't know. I get the feeling we're going to start moving quite fast, and that might catch a few people out. So, yes, it is a bit quieter. Yes, people are on holiday. Yes, there are probably people sitting on the beach watching this on their phones, sipping a tequila or whatever it might be, or pina colada, I should say. Or maybe they've just switched off. I don't know. But either way, you've got to be in it. You've got to keep watching it, because when it starts to go, it'll go quick.
Yeah, to summarize what you were saying, because this goes back to what you were saying last week, is that the Fed is currently causing a lot of pain, and probably on purpose, so that then, like the tooth extraction, so that then they can let off the pain and the markets go crazy, probably before the election cycle. And that makes all the politicians happy with the Fed. And they see that as a big win. And so probably the pain will continue for a little while, and then it will get really good, and people won't remember the pain. Like Justin made this comment right here, and he's right. I tried to help prepare the audience as much as I could, but nothing prepares you for the bear market, even though it's only like 2 years long. Compared to other markets, that's not very long. The real estate market, when it's down, can be down for 7 to 10 years, like in the pain point, right? So 2 years isn't very long, but it feels so long. And I guess my background in real estate helped me prepare for the first one, because there wasn't a lot of people, emotionally giving good support on, oh, this is the market cycle, and just, understand where it is. But even with that emotional support, that doesn't mean it feels short. It feels like it takes forever. And Justin says quite wisely, the bear market is exhausting. It is exhausting. What's up, Web Zombies? Silent Hunter asked if we can take a look at Network. Mickey asked for ANKR. We probably can. We have a short list of things to get to. Paul, why don't you share what you're looking at in the greater markets, and
Sure.
we'll start working through them.
Yeah, absolutely. So, I'd like to back up what I'm saying about things technically looking bullish by actually showing you the chart. So here we have the Dow. It's been a really good upward trend, and it's pulling off at the moment. It's coming off the retracing slightly, but it's to be expected. And so some people, this is the thing about charts and markets, you can read it any way you want. I mean, it's like photography. You can take a picture of something, you might see something that somebody else doesn't see, but the market is the market as far as I'm concerned. And yeah, you could invent that this is a massive top and this is one part of it and this is the second part of it. Anything's possible, but it's unlikely. And the reason why it's unlikely is partly because normally in major topping formations, you have this euphoric buying spree where everyone is long and everyone's like really happy and expecting more of the same, and you just don't get that. I think the actual client, if you look at the client positions, and then various ways to do that. In the UK, you can look at kind of spread betting positions, and you might be able to check the futures market to see the way the market's positioned in terms of options. But you'll find that they're not expecting the market to go higher, and that doesn't mean it won't come down. So it doesn't mean that this can't come lower, but the general sentiment is quite important, and that sentiment is still bearish. So that trend is still up. The S&P is going, I think into next year it's going to break higher. It's going back to this high. This doesn't look like a major double top, which would be very, very bad if that was the case. It just doesn't look structurally like that's the case. The trend is still up. The sentiment is still negative. So I remain bullish, and I will continue to remain bullish on that. So stocks are doing okay. The Russell 2000 is smaller cap stocks in America. And what you're seeing here is a range. It's not a downward trend. It's not an upward trend. It's just a range, but it's knocking on the door of this resistance. It wants to take it out. So smaller cap stocks could well break higher and catch a few people out. We've got a moving average crossover, which is a buy signal from an algorithmic point of view on a very simple trading parameter. But you know, we've had a sell signal and a buy signal before there, and the market just went sideways. So, but it looks in a better position to break higher. What I like is you probably worked out for people who've listened to the show before. I like ranges where the market breaks out from the top of those ranges, and this is a really nicely defined range. So it would mean a lot for the macro picture if these smaller markets, smaller stocks started to move higher. So the Nasdaq, I think we've got to put that in a sort of separate box to a certain extent, because this has been burning higher ahead of everybody else, ahead of everything else. And so a correction here is not overdue at all. It could correct, you know, pretty far and still be in a very decent kind of bull market. So so what I would suggest is so just going back to my system here. Yeah, so I may have just lost my screen. Hold on a second. No, there we are. It's back. So what I would suggest is everything seems to be moving in the right direction. We have had a rebound in the VIX. The VIX index is the volatility index based on the S&P 500, which means that it got to a low level, got to cheap levels. So people started buying it, and there was a bit of a correction. If we look at where the S&P was, it was getting a little bit overbought. So it needs to ease back. But I'm pretty sure the market is short here, wanting the market to go lower, and there will be lots of buyers jumping in to cover their positions if it goes down. So, and that may not happen. So briefly, in Europe, pretty much the same thing. The markets are hovering near significant resistance points. I'll just show you on the DAX. It's hovering below significant resistance. Looks like it wants to break higher. It's breaking higher. This looks like it's breaking higher in the CAC 40. This is the French stock market. This is a really nice pattern of rising lows into resistance. So when I see that, I actually get quite excited, because it means that there's a few thousand points to break out on the upside. So for me, it may not happen today, it may not happen in a week, it may even take longer. It could take until the end of the year, but we are building up for something, and we're building up some really good what we call risk on trades. So as far as the macro scene, it's looking good. Now the dollar has been a bit awkward, and it's rallied, which is not really what I wanted, but the market doesn't do what I want, it does what it wants. So I can't tell it what to do, but it's still within the parameters of a bear market. So, and if we go back here to when it was trading around 115, people forget that it was 120, 130, everyone's saying the dollar's going to go higher, higher, higher. And actually very recently, some of those people switched and started going, yeah, the dollar's going lower, lower, lower. So what the market does is it catches those short-term traders out. Now, that may include me from a point of view of, I thought this was break this level and off we go. And the market goes, no, I'm going to come back and take out all the stops. That's just the way it is. There's nothing I can do about that. But the general trend, as we can see from this line, is still down. And I'm not changing that view just because it's gone back over this point. It doesn't structurally make it bullish, is what I'm trying to say here. And to add to that, we have got some positive moves in the precious metals markets. So they are no longer sort of bearish, and they're starting to move higher, which is an indication of a change in sentiment. So things like aluminium was going down, it's going sideways. Copper, this is lead futures going sideways, that's potentially going to go up. This is copper futures, which is going sideways. It's painted into a corner, but it's it's the fact that it's just gone sideways when everything else has fallen for me, that it shows its resilience, especially while the dollar's gone up. So, and then finally, precious metals, we've got gold, which has been knocking on the door of this 20,000 and 2081 level 1, 2, 3 times. It's come off it again. Now, why does this matter? Well, it does matter because if the dollar's going down, people are going to move into gold, they're going to move into stocks, they're going to move into precious metals generally, and they're also going to move into Bitcoin and other things. And that's why, for me, this is important, because when this happens en masse, when there is a big decline in the US dollar, then people will move into Bitcoin, and then it will further underpin the altcoins because people want to take more risk. They'll be making more money elsewhere, and that makes them want to take more risk in other areas. So it will spread out. So
I call it the waterfall effect, right? So it just kind of spills over where they're at and it flows in other places.
Yeah, I mean, I've not heard it called that, but I guess it's a perfect description, or it's a good description.
Yeah, it's almost like we see this in like Bitcoin, when Bitcoin goes up massively, and then that money kind of spills over and it goes into everything else during a massive run. Yeah, that's interesting what's going on with the dollar, in the dollar, the DXY going up. My guess is that it's going to then reverse down, and it's just going to build up some momentum for that. It may get a little bit noisy in the background. I have the lawn care going on outside, so it's coming through the window. I can hear it some. Let me know if you guys can hear it and you can't hear me. Johnny McGovern says it's so boring at the moment, which is what I like, right? So, that I just created some statements that reflect kind of indicators for everyone to understand what's going on. And that's why I use the term buy when it's boring. Because generally the right things are setting up for the market for the future to be really, really good in crypto. But it's boring right now. And a lot of people don't buy when it's boring, which is why there's such good profits there. They like to buy when it's exciting. They love to come in after 20Xs and, drive those 20Xs up to 40Xs or 50Xs or 100Xs for people that had bought while it was boring. So that is coming, and that waterfall moment is coming. All this is coming in the future. Now, I wish it was actually, I don't wish it was tomorrow. I would like some more time to accumulate, but it's hard to be patient in anticipation, kind of like you're getting on the roller coaster and it's just starting to make the climb, kind of have that anticipation stress. So a lot of you are feeling that anticipation stress right now, and that's normal. We do have some exciting times ahead. They're not quite here yet, but they're only really exciting if you position yourself well during this boring time. Let's take a look at Bitcoin and see what you feel is going on with the price action here. It's definitely been interesting. It looks like it might be breaking to the upside of this recent wedge.
Yeah, I just like to make a comment on the boring thing, if I may.
Yeah.
And it's just from my own perspective, but from what I've seen of traders who try to make the market sort of exciting, to get their kind of thrills out of the market, I think you've got to be very careful, because it can become a bit like a drug. And I always say, if you want excitement, go skydiving. But the markets, when they're boring, that's when you do your research. That's when you get prepared, and you get prepared for a change. And you think, well, okay, well, what's going to happen what would you do if Bitcoin went up $3,000 tomorrow? What would you do? Wait. So you wait, and then wait for another 3, and then you'd wait? Or are you ready for a breakout? Are you prepared? What's your strategy? How far do you think it will go? There's always something to do, always, even when the market is boring, so-called boring. But if I've seen traders who try to get, as I say, get their excitement out of the market. And the problem with that is that their stress levels reflect the market, and it becomes almost untenable, and it spills over into other areas of their lives, like, their relationships and everything else. So if you see it spilling over, that's usually a good sign that you need to get a handle on it, because it's very important, but it's also, the markets are like a game, and you've got to think of it like that. And it's almost like a poker game. You get rattled, and then things are going to go wrong. And so, so just on the boring thing, I know it's a perfect time for research. Just to summarize, I think there's always something going on, but in terms of the price action, it doesn't look that boring. I've seen it worse. Volatility has dropped in Bitcoin, but we talked about that a couple of weeks ago, and how usually a drop in volatility is the beginning potentially of another big move. And although stocks were coming off, we were saying potentially this might ignore it, and Bitcoin could just start to go up. Now it's done a little bit of a move. I noticed on Twitter people saying, "Why is Bitcoin at 30,000? What's happened? What's the move?" And I was thinking, well, it's not really moved that much. What are you expecting it to be? So it's broken out a little bit, but volatility has definitely been dropping, and interest has definitely been disappearing. And so for me, this is a time just to be a bit more cautious that this could be getting ready for something a bit more substantial. So this correction here is still within this broader market. In terms of a bear market, there is a bear market in altcoins, but it depends where you're calling it from in terms of where the start of this move is. Okay, no matter how far you go back, you can obviously call this a bull market, because Bitcoin, from its beginning is up massively. But for the year, this is still in an upward trend, even though it's slowed. It's much better that it's doing this than it's making new lows. I mean, one of the scenarios that we had to consider was, even though longer term we were bullish and we're looking for a reversal around these areas, one possibility was a move to sort of 12,000 or maybe 8 if it broke certain Fibonacci supports, which it didn't. It turned around and everything. This was a nadir for lots of reasons, the SPF stuff and what have you. But it was pretty boring and difficult to deal with this bear market around here. But now, to me, this is a new bull market. I see this as a ongoing and developing bull market, and we've had sort of pretty much nothing but confirmation, other than sideways price action in the short term, that supports it. We got higher lows, not necessarily in the altcoins, as I've said, but in this one, in Bitcoin, definitely it's looking bullish. In ETH, not so much. Still sideways, but it's sideways in a rising market. And a rising market, whilst it's been going sideways from a bigger picture, is what we look for in terms of a base. So this is a basing pattern. It could potentially be a massive base. So, we might not be that far away from some excitement. So it's a good time to be thinking about strategies. So this triangular constriction here. You've got a high, a low, and a low. So you see how you could draw a triangle out of that. I really like those patterns when they're in this sort of base and when they're in a rising series of higher lows, and when it also fits in with the bigger macro picture. So if we draw a line across here, and then if we draw another line across the low in ETH, we could probably take it from here to here. That fits in fairly nicely. So you've got this triangular constriction. So for me, a breakout of that would be very significant, simply because you're going to get an early trigger to then break this 2031 level, which has caused a lot of selling, 1, 2, sort of 3, 4, although it did get over here. So we get an early trigger to break that. So I think if this goes, then this will definitely go. Definitely meaning high probability, not 100%. Obviously, things can go wrong. In which case, this could start to run. And we're waiting for the next, the market to wake up to the fact that we could be very close to a pretty decent year for next year. And then people buying ahead of that. So the majors are looking good as far as I can see. They look interesting, and I don't think we're far off some decent moves.
Yeah, smart money is buying, the smart money that can buy right now. There are a lot of corporations, sovereign wealth funds, and other things that I think would love to be getting into Bitcoin, but it's not that they can't. It just takes so many different people's approval, and then they've got to figure out the custody situation and everything. once an ETF is approved, a lot of corporations and other things, the CFO can make a decision to hold Bitcoin once an ETF is approved, and he can make that decision on a 10-minute phone call, and he can buy $1 billion of Bitcoin with his market person with an ETF. Whereas right now, if you want to buy $1 billion of Bitcoin, he would have to get all kinds of board approval and take 15 to 20 meetings. That information comes from Michael Saylor, who's very familiar with this. And he says, stating what a difference it's going to make once there's an ETF and the amount of funds that can get in. But there's lots of indicators that a lot of smart money is loading up. They're not saying it. They're trying to keep it quiet because they like to buy when it's boring too. So the smart money is buying right now. The dumb money is panic selling, though most of that is washed out. And that's probably why we see the price action doing well, is you have smart money accumulating. And most of the people that are still here, well, they're holding too. And they've washed out a lot of what they call the dumb money, or just people that don't have the long-term vision of where this is going. Let's jump into some of these altcoin picks. Let's take a look first at HBAR.
Sure. By the way, I hope that didn't sound too critical, what I was saying about, that the whole boring thing. I think it's such an important thing about markets that I do really like your phrase, buy when it's boring, because there are so many cycles that are at play. And the problem when it gets exciting is also people can freeze. So, and what I mean by that is there can be such high volatility, which I think is coming. There will be such high volatility that people might find it hard to then react to that volatility. It really depends. Everyone's different, of course, aren't they? But when the market is running, it's very, very hard to jump aboard, because it always feels like you're buying the top. You always feel like you're buying the top of the market, which is why I like technicals, because it kind of forces you to buy or forces you to go with a trend, which broadly speaking is the right thing to do. But going back to the psychology, it's actually very hard to do that.
Yes,
so that's why you need an external tool to say, well, look, I'll explain. Just one final thing is, when I teach technical analysis to people, I would show them a chart and I'd say, what do you think of that? What do you think of the chart? And they say, yeah, it looks like it's going up. And I'd say, well, would you buy it? And they'd say, no. And I'd say, well, why not? You think it's going up and you want to be a trader and you're not going to buy it. And they go, no, it looks too expensive. I'd say, okay. So that tells you something about how people think when they look at something. They say, yeah, I like it. It looks like it's going up, but I don't want to buy it. Well, what do you want to buy? Do you want to buy something that's going down? It's strange, really. So, but that's human psychology. So anyway, and one final thing to say on the whole thing is, just because you're looking at a chart, it doesn't mean that you're going to be right. You could get it wrong, and I do get stuff wrong all the time. It's just that you're looking at a probability of when you're right against when you're wrong. And when things are difficult, trades are difficult to kind of pull out of the market in these times, it sometimes pays to wait a bit until things look a little bit more aligned with the type of signals that you want. And it really depends on your strategy. Yeah. So some Web Zombies comments there, which I'm sure you're going to read out. But anyway, I've been tasked with talking about Hedera, which we've looked at a few times before, and it's been quite an interesting one, because this is again in this kind of boring zone, this consolidation. It's made a higher low, which I like. So this line I've just put in today. So we've got this low and this low. So I think the last time we looked at it, it was coming down, and I was saying we need some form of reversal, but it's still caught up in this bigger range here. So what I like to think of is, if I'm trading this, am I about to miss something? If I don't, is there an increase in volatility about to happen? Is about to break a key support, key resistance level? And it's literally right in the middle of that. But longer term, it looks pretty good. It's on an upward trend since 2020. There's a decent amount of data there. It's just in an upward trend from 2020, and it's also in a downward trend from 21. So it's kind of very balanced in terms of its trade at the moment. But I think, broadly speaking, it's doing a similar kind of setup to most of the other markets, where it's going sideways for a bit, forming a base, and then will start to trade upwards in an upward trend. So I'm kind of using the macro picture to reverse into what this might do. But it is showing some form of buying, because this is a higher low, but it's, as I say, it's right in the middle of the range at the moment. But I'd be inclined to take a small position in this and just let it wait. So a small buy for me would be fine, but nothing significant as yet. Where it will get very interesting is when it takes out this 9 cents area, 9 to sort of nearly 10 cents, which is obviously a big psychological level for it, because it bolted at that before. But if it breaks that, it will make a double bottom. It'd be an upward trend. All sorts of nice things are coming out of it, but that remains to be seen. I can't invent the price action. I need to wait for it. But for the moment, I think it's pretty good.
Yeah, HBAR, I feel like, has a lot of institutional adoption coming, or a lot of, so it's a blockchain mint for certain types of things. I believe it is permissioned. It has high throughput. It's going to be right for some types of business that are really going to become aware of crypto, or more aware of crypto, in the coming couple of years. So I think Hedera has a really good future ahead for it. I like to buy along the lower trend line, and it's off of that. The lower trend line is scary, though. Like, Paul will rarely buy the lower trend line because it might break to the downside, and that is a risk. And so I buy the lower trend line only on things that I like, and I think that lower trend line for me still has a lot of value proposition for what I feel the upside will be when the rains come in. When I talk about the rains coming in, about every 4 years, we have a massive run in crypto. I call that the rains coming in. And it literally is like rains coming in just everywhere. And new money, fresh money comes in. And they actually throw it at just about everything. But specific picks that really get in the narrative can do exceptionally well. And those are the type of picks that I look for. HBAR is a good project. It's outside the market cap range of what I'm buying, though I do like it. It's got a $2 billion market cap. It's off its lows from before, but just like Paul was showing, it's putting in a higher low. And this is a very nice basing pattern. Like, that's an exciting chart to me. When I look at that, that is likely setting up for a really good future, which coincides with all the alignment we see happening in all these other things in the crypto market. So great suggestion on HBAR. I like it a lot. I do like that most of the tokens are in circulation, or 32 billion out of 50 billion. So 65% are in circulation. There will be some more vesting in the future and more come into circulation, but 2/3 are already out there. I like that. So it's probably got a really good future ahead of it. Market cap's at 2 billion. Something like this can go to a market cap of 20 billion, 100 billion when the rains come in. Great suggestion. For me, it would be a small buy if I were holding blue chips. If I were holding a diversified portfolio of blue chips, I would absolutely have Hedera in it. Right now, I'm in the much more riskier low cap stuff because they tend to do well in the bull market, and I'm okay with high risk right now. Next cycle, I will probably take a more conservative approach. All right, let's jump to our next one, which would be, pull that up.
It'd be Spores.
Yeah.
And by the way, even if something isn't looking interesting right now, it is great to be reminded of, these ones that could be bubbling up. So yeah, it doesn't have to have actually broken out for us to want to look at it. We should be keeping an eye on things. That's a nice thing, I think, about looking at charts, is you have in the back of your mind certain levels where things become interesting, and you can either put an alert on the chart, or just even cycling through, say Bitcoin broke over 36,000, you might go, okay, I wonder what Hedera is doing. Let's go back and see if something's going into it and whether money's going into that particular market. So it's really useful to keep looking at lots of markets. The more the better, really, as far as I'm concerned. With spores, this is making the point about watching stuff when it is boring. This one really is, caught right in the middle of a very balanced range. So we've seen the high, we've seen the low. It's almost exactly halfway between the two. And for me at the moment, I'd have to be neutral on it. So it's going to be a wait. It's had a bit of had a lovely run and then a big correction. So psychologically, that must have been difficult to see, because there was a very nice initial trigger, which was this inverse head and shoulders that came out here. Very small pattern. So we saw quite a big rally from that small pattern. And then it's V'd on the way down again, back into this range. So psychologically, that's been a roller coaster for sure. It's very volatile. Now, what it might mean longer term is that we're getting this basing pattern, a bigger basing pattern. And what a bigger basing pattern would mean, that is, if it breaks this 0.0017 level, then that would be the completion of a massive base, and we'd be looking at a much bigger rally. We could start talking about a move back to 0.2 or something like that, all the way back up here. So I would need some evidence that we're moving the ship towards that course before I could get excited on it. I know for good projects there will be people nibbling at it down here, or maybe adding to positions. That's not how I would look at it, but I would have some sympathy with the market kind of throwing good projects out with the bad, as it were, and presenting good opportunities from a fundamental point of view. But as I can only judge this from a technical point of view, I need to see some form of upward trend and some confirmation that there's a base there, and a bigger long-term base, which would show up on a weekly chart before I could get in. At the moment, no, I want to stay on the page. I don't know why that jumped across there. So we simplify that. This is very smooth downward trend, very smooth upward trend, relatively smooth downward trend, but we need to see that double bottom to create a base. The technical base for me is highly significant, and at the moment it's only done one part of that, so we need to wait for it to outperform a bit before I could put that ahead of other things. So for the moment it's a wait.
Yeah, great. Let me reflect that. I wanted to get to the super chat. So Paul, wait. Bill Gardner, shout out to Bill. Let's go. Just bought that 2 million OMI. That is awesome. I put in a buy order yesterday for OMI. I don't know if it triggered for another 1.1 million. I'm definitely accumulating OMI at these prices. Speaking of spores, I like this price that it's at. First of all, the market cap is under $500,000. I like the team over at Spores. I mean, I was sad and glad that it pumped. I had called Spores with one of the people that had asked me in the Patreon group, if you're a gold member, you can message me and I'll get back to you pretty quickly. And he had asked me what I thought were my top 5. So he actually got that information first. I then sent it a week later to a lot of the group, but Bumper and Spores were on that group. So Spores ended up going 10x from there. And, after it had gone 10x, people said, is it a good buy? And I was just like, it's already gone 10x from December. I don't know, but it's done this nice pullback. Now, could it go back lower? Yes, they ran into some snags, like one of the staking pools got hacked and some tokens, like it caused some FUD and other things. So the price came down, and that's why you saw this large drop here, but the prices held pretty solid for a launch pad. The token prices are really low for the level of projects that launch their tokens through them. So I do feel like Spores has come back to a good value. I would definitely rate it as a buy at this level for me. And you notice Paul and I will often have different picks, which is perfect because Paul gives you what his picks are and why, and what his decision points are and what he's looking for. The goal of this channel is to provide lots of different views on things so that you can see how different people look at things and how different people buy at different points and why they buy at different points and why they like things at different points, because that helps create the most informed audience, which is what I want. I want sophisticated investors that after 4 years of tuning into this channel, I hope you become pretty sophisticated and good, right? It's not about fishing for people. It's about teaching people how to fish so that they become really good. So congrats, Bill, on that purchase. Yeah, that's awesome. If I remember right, you had a lot of VV collectibles, but not a lot of OMI. And so it looks like you're picking up some OMI bags, which is good. I'm heavy on OMI and I want even more. Shout out to Jester who made it. Jester is one of our Patreon members and a great long-term family member for the Rainmaker family. Let's see. Yeah, it took a while to go through. Probably made you a little bit nervous. Nick Scott, been holding Spores all the way down, so finally feeling positive. Yeah, this nice basing pattern, right? Is showing some turnaround, which is exciting. All right, let's jump over to our next pick, which would be DRIFE. Well, DRIFE had something interesting happen to its charts.
Yeah. So DRIFE is, when you say something interesting, I'm not actually sure. Maybe I'm not saying the same thing because it has.
No, that's not it.
Right. Okay. Because it's not showing up on. Here we go. See, I had a look at DRIFE on CoinMarketCap, and it didn't have the up-to-date price action. So I had a look on the trading view, and that's what came up. So unless you can maybe you can show me a chart.
Let me try. I'm going to try CoinGecko and see if it has an updated chart. You see a little bit of it there.
DRIFE, it doesn't appear in normal charting system.
Yeah, so I'm on CoinGecko, and a lot of these lower cap altcoins, they often won't appear in some of your traditional stuff.
Yeah, it did used to, but it's sort of
it
come
isn't
off.
Now. Interesting. It is DRF is their ticker symbol.
Yeah. Okay. So I've got the
and that one showing up wasn't. Yeah. There you go. Yeah.
Okay. So let's just get something that looks reasonable. Okay. So it's at a bounce, which is like, so I remember this October rally, this breakout that kind of came kind of from nowhere, and it'd been running in this downward trend, big breakout. It's like, what is this news? This is great. It's going to get some traction. And then it just pulled back against the trend, which normally a short pullback is fine because it's like the train analogy. You're waiting for a little bit and then you expect the market to go again. And it just didn't do that. It just kept pulling back and pulling back. Then went into this range, which was a bit of a warning that obviously whatever was going on from here wasn't it wasn't going to follow through, certainly not in the short term anyway. But it's okay if this is building a base, but we need some evidence of a base. And instead it just drifted lower and then managed to take out the previous low, which is always a warning sign. So whilst it's been below there, I think sort of standing aside and just, waiting for it to get some upward momentum would make a lot of sense. Now, it has done something interesting in the sense that we've seen a gap. The trouble with this chart is I can't get this thing away without sort of trying to identify where I'm talking about in the chart. But if you look at the last 3 bars, you can see that the last two, there's been a gap to the upside. So that's the price action you're talking about. There's been a positive move, which we have seen before. There was a big gap here, and there's a gap here, and there's a gap here. But a gap is normally associated with heavy pressure, either buying or selling. So there's heavy buying pressure for some reason, which in itself is a positive factor. But for me, it's taking a step back and looking at the big picture. We have still got this overhang of price action in this range. So we need some resistance to be cleared. So I want to put the line through this high and this high and this high, because that defines the short-term downward trend, if you like. And until we get through that, I'm going to be cautious, because it's because that was my breakout point, and I liked it there, and I was willing to give it a go. But it's right here, I've got to be a bit more cautious until it does some more work. Now, it's a great time to be looking at it. It's really important to have this on the radar, because I don't want to wait until it's all the way back up at this high here and then decide, why didn't I see it before? So this is a perfect time to be watching it. But I need that. I would like to see that line broken. And I can see by eye that it's not broken yet, but it wouldn't take much for it to get through there. And if it does, then I'd take an initial position and then look to add to it on a break of this resistance. And then we could be in a much bigger upward trend. But those are a couple of steps forward, a couple of little tripwires that I'd need to break before I could turn fully bullish. So for me, it's a wait, but it's definitely a good one to be watching for. So, thanks for putting that back on the radar.
Yeah, great pick. So there was an award, as, let's see, Nick Scott says here, DRIFE won an award recently. I'll point that out, and it does coincide with this recent climb. But I like this type of chart, and you see how it's the momentum to the downside is slowed down, and possibly even the bottom is in. The market cap for DRIFE is 561,000. So this is the type of risk ones that I take. Now, I don't put like 50% of my portfolio in something like DRIFE. No way. It's too risky. But what I like is these high risk ones with low market cap, that I like the narrative. I obviously like the team, because I've invited them on multiple times, because I want to see who's behind this ship and see what I believe in them. And so one of the great things about having a channel is that, as an investor that has a YouTube channel, I get to have guests like the CEO of DRIFE come on multiple times and share with us her vision of where DRIFE is going and how things are going. And so this is at a super juicy price point, $500,000. And what I like about it is, if it goes up 10x, it's still only at a $5 million market cap. If it goes up 100x, it's only at a $50 million market cap, or in this case, $56 million market cap. If it goes 1,000x, that's still only $500 million in market cap. And so I can take like positions in this without putting like a massive chunk of my portfolio. And if it does well, it outperforms much of the rest of the portfolio. And if it goes to zero, well, then it was just a small fraction anyway. And so I love these kind of risky picks. I love where the price is at. Real quick, for those that want to know, this is the award that they received. So this was July 22nd, and you'll see that the price started to pump. This was July 22nd here. And so then over the following days, the price pumped up some, and it's since retraced. Down in this downward time, you have a lot of people that are holding. They're just looking for a good chance to exit. So when it starts running up like this, they then go ahead and exit and call it good, and they're done. And yeah, it comes back to a price that's, once again, really, really juicy, in my opinion. So yeah, here's the award, Decentralization Pioneer Award at the inaugural edition of the BW Business World Web 3.0 Summit and Awards in 2023. So congratulations to DRIFE. If you're interested in this one, I would definitely watch the interviews. Just search on the Crypto Rain channel, just search on DRIFE and pull up one of the interviews. so that you can watch the CEO and get a feel for her yourself and see if you like it. So for me, this is a buy, especially at these prices. It's a really good price again. In fact, I will probably pick up more, and I have lots of it already, but I'd like lots more. All right. So great suggestion. Let's take a look over at Kaspa.
Yeah, so Casper, I'm sure we've looked at this before, and I'm just trying to remember when that might have been, but it's definitely been on the radar and smooth upward trend. I mean, it very simple. It has to be from a technical point of view a buy. Now, you might say, well, isn't this overbought? Isn't it perhaps it's gone too far? And yes, that's possible. But that's the thing with trends, they can often go much further than you expect. And so the only sort of element of caution I have with this is that it's going at a time when I would expect everything else to be in a smoother and more broader upward trend. And so if everything was cycling higher, then I'd feel more comfortable. But because it's a bit of an outlier, I'm wondering whether this will correct and everything else would start to catch up. So, but I'm kind of, punishing it for being a outstanding kind of momentum play and it already being in an upward trend, which seems a little unfair given that it hasn't actually made a reversal pattern as such. So for me, whilst it's above this trend line, it's in the buy camp and it's accelerated a little bit since, making that trend line. So it's now moving off what I call a support line, which is this line here, which can be unsustainable. There will be times when the market is red hot and crazy, and that will accelerate even more. It doesn't feel like we're in that sort of period at the moment, but we could be moving towards that in the future. So it seems more likely that that won't hold and it'll come back to this angle of trend. But what we have got is a very good support point here. The previous high, all-time high on the chart, corrected off and then took a little go at breaking. And then if you look at how it broke through, it was very smooth. So yeah, there will be some profit taking against that. But if it does come back and touch it, that should be a really good support point because it was prior resistance and those things seem to reverse themselves or have a better chance of reversing themselves. But overall, given the macro position, it wouldn't surprise me to see it come back to this longer term trend line, but that's still an upward trend. So for me, it's in the buy camp.
Awesome. Let me reflect that. Me on this one, I don't know the team, and it already has had this big pump, and that always makes me nervous. I don't chase green candles, but I have different buy and hold criteria than Paul does. And what he does is he catches a trend when it's obvious it's a trend, and then he understands when there's topping patterns, and then he takes his profits out. And because he has multiple markets that he trades in, I just mostly stay in crypto. He can always move on to other markets when crypto goes a different way. So we have different buy points. And for me, this isn't at a point that I'm going to buy it. I'll just categorize this as one that I missed. It has actually done really well during this bear market. So it was 0.03 cents. It's gone up 15x since mid last year. Very few things have gone that way. So I'm more hesitant to buy in something that's already gone up 15x in the last year when everything else is down, when I can buy these things that have just been devastated in their price. Yet because of my fundamental analysis, I have an expectation that they'll probably turn around and do very, very well in the coming bull market. Whereas something like this might then go through a settling and retracement period, because probably a lot of people have been chasing into this because it has been going up in a down market. And I have no feel on the pulse for how long this trend may last. And I don't have Paul's technical abilities to say, oh, yep, it's reversing, I'm out. So for me, it's just not my buy point. And so for me, it's in fact, if I held this, I would be taking some profits out Not that it's a bad project. It's a layer 1 solution that has really fast block times and decentralization. I can't say I fully understand. They have a different way of doing their consensus algorithms that is leading to good things. A look at their market cap. Now, the market cap's only at $1 billion market cap, which isn't very high for a layer 1, so it could have a lot more upside. I just don't know enough about it to know. And also, a good chunk of their supply is in circulation already, and I like that too. And they're tradable on some of the bigger exchanges like Kucoin. MEXC is becoming a big powerhouse. Gate.io, and then LBank and BingX. Okay, so they're at least tradable on Kucoin and MEXC and also Gate.io. Potential here, right? I just don't know enough to say that on the technical side, or fundamental side, which is what I'm often looking at. I don't know enough to know that I would be buying it and trying to take a further run. Let's look at actually our two strategic relationship projects. And there's reasons why I want to look at both of them. The first one is Bumper, and Paul had a chance to watch the video with Jonathan Descartes from Bumper. Paul, what did you think of that interview?
Yeah, it was interesting actually. I'd very much like to ask him some direct questions.
Yeah.
But I think I got what's going on here, and it doesn't look like, for me, perhaps my reading of it, that there's sort of a new equation or new maths. It's just the implementation of how the risk is shared between people who want to potentially sort of hedge their risk against people who are willing to take the other side and earn a return. So that seems innovative and interesting. But I want to watch it again. So there's a few questions that was like, oh, okay, that makes sense. And a couple of things was like, well, Black and Scholes is the gold standard. So that seemed to make sense as well. But yeah, it was good, but I'd like to ask a few questions as well, I think. But definitely what else is there out there like it? There isn't. So it's very new. I mean, if there is something else, I don't know about it. So I'm sure it would have come up on the radar as a competitor. So it's definitely an interesting implementation of perhaps sharing some of the risk and being a middleman when it comes to trading options, for example, which is what the Black and Scholes model is based on. Options can be expensive with their spreads can be wide, and there's markets have so many expressions, don't they? It doesn't mean it's necessarily true, but one of them about options is that most options expire worthless. So people who buy them don't tend to make money, but people who sell them do. So that seemed to suggest that if you create an environment where people can partake in that selling of options in this way, then you're creating something that's quite potentially innovative. And if you're in the middle of that, if you're helping facilitate that and you're able to make a business out of it, then that's great. So, I'd be interested to see how things develop. And I know it's very well documented as well, but it's just a question of time for me just to go back over it and sort of answer any more of the questions that I have. But it was a good interview, and as well as the interview being good, the chart has been interesting, and I've got that on Coin Market Cap. But once again, I'm not getting the latest price action. So I don't know if that's a problem with Coin Market Cap or something else. So let me just have another look while you speak about what's going on. Here we go. So it's all. Yeah, no, it's going back to the. So it's going back to the 31st. So it's not giving me the up-to-date price.
Yeah, on CoinGecko we'll probably have up-to-date. It must be a problem with Coin Market Cap.
Yeah, that's strange that It's happened with a couple now, isn't it? So let's get bumper up on there. Maximum candlestick chart logarithmic. So as far as the price action goes, putting all the questions and other things aside, this has been in a nice, smooth, relatively smooth upward trend since the start of the year. And again, it comes into its correlation between what's happening in the broader market. And one of the things I'm fairly convinced of is that its upside will be tied to the upside in, or the relative upward trends in, the majors. Because when do people want to hedge? When they've got a lot of something. When do they buy a lot of something? Usually as the price goes up. So the higher it goes, the more their business model will make sense, even if it does also make sense as it's going down. In fact, it may even make more sense when it's going down. But I think you've got to think of how people act from a psychological point of view. And it seems to be reflecting that. So I wouldn't be surprised to put a correlation coefficient over this and say Bitcoin, and you see that they may be moving fairly close together. In which case, this is, if that continues to be the case, and correlation and causation, you've got to be careful of that. But if that continues to be the case, then this could really have quite a lot more upside. And I've been bullish on it from a technical point of view, because this has looked like an inverse head and shoulders. This is the left, this is the head, this is the right shoulder. It broke out here, and it's managed to hold over its trigger point as well. Even though it's gone sideways, it's still held the trigger point.
Mm-hmm.
So, and it could be getting ready to break into a new high. So I still like it. So I still think it's a buy. And from my point of view, I don't necessarily need to understand the business behind it, although it's nice to do that from an intellectual point of view. But as long as the chart is reflecting buying and a bullish trend, then for me, it's okay.
Yeah, I want to share a little bit deeper, because we have a tool that is now out which shows basically they have their prototype out, and here's the article. So it just released their prototype, and the prototype is just so people can get a feel for what it does. And so some people have a hard idea, or they have a hard time picturing what it is that Bumper does, because the way it's doing things is just different than has been done before. So when you're talking about investment, when you get to larger grade investment houses and other things, and like sovereign wealth funds, they don't usually touch something as volatile as crypto, because they need solid ways to hedge it, so that if it goes to the downside, they don't lose so much. And so they won't invest till they can see good ways to protect their investment. Now, they can use options to protect their investment. Options, as Paul reflected, are expensive. Because of smart contracts, Bumper and the team behind Bumper have a lot of experience in options and financial instruments, how to protect them. They came up with this different way of protecting the price, and it's kind of like a stop loss, but much better than a stop loss. So a stop loss is a tool that you can use and you can do things like trailing stop losses. And this is a tool that traders use. This is a tool that some funds use. The problem with stop losses is that if you're trading $10 billion in assets, trying to execute all those, the stop loss trades will push the price much further down, unless there are, there's like $1 trillion in liquidity of whatever is being traded. So Bumper's idea was, what if we create a way that's different than everything out there to provide price protection? And this has a lot of interest to me as an investor, because I found during the last bull market, I was taking profits too early on some things because I didn't have another option. My only way to explore the upside without like losing a bunch of my gains was to make sells at strategic points along the way going up, because they didn't have a tool like Bumper. And what Bumper allows you to do is protect your downside risk while further exploring the upside risk. So the problem with the stop loss is, say something trading at $100, or let's say ETH is gone up to $10,000, and I want to put a stop loss in it on ETH at $9,500. What often happens though is that it'll run down temporarily to 9,200 and then it will run up. And so I got stopped out at 9,500. So below even my $10,000 price. And then it went way higher. So I was right on which direction it was going to go, but I got stop lossed out in the middle of the night right before a run. So Bumper has a good long-term solution in that you can buy protection on your ETH at say $10,000. You can protect it at the 95% price point. And what happens is if ETH falls below that 9,500, it actually will swap it out to stable coins, and it will keep a marker there. So it's kind of like a stop loss, and say it goes down just a little bit. And then when it goes back up to 9,500, it swaps back into the ETH. And then you can take that further upside. And so you wake up, you see that it went down temporarily. That's okay. You still have your position, and you're really happy because you were protected that way. What I like about it is exploring further upside. So what I can do rather than selling the positions, and right now they're only going to be doing ETH first, then they will be doing ETH wrapped Bitcoin. So Bitcoin on the ETH chain. Then they'll go into other assets, but it wouldn't be too difficult for them to do anything that's in ERC20. So when it's going up, you explore that upside, and you can take that upside while putting in protection points in case it reverses on you. Then you just exercise your protection option. And so you've made much better profits than you otherwise would have. So that's what I'm looking forward to with what they can do. Now, with their simulation, you can go in and say you can earn, and it gives you some money to play around with, and it's not using your actual wallet. And so say you can click on earn, and I have $20,000. Do I want to put, so this can take the counter side of it. So let's say I said max, and I can only put it in the ETH market right now. And so I'm going to take this position, period ending in say 120 days. I can choose what volatility, what risk tier I want to be in. And then I can go next and confirm the deposit, and boom, it costs a little bit of the bump token to take a position on either side. And so now that $20,000 is out there earning a yield by providing some protection against some positions. So bam, that's done. And I've got $20,000 out there providing protection and can earn some yield on that. Or say I want to go the other route and I want to protect. And so this is what I'll be using a lot during the bull market when things are running up. And let's say I want to protect, and let's see, they give you 10 ETH to play around with on their test net, right? It's not real ETH, but I want to protect it, and I want to put the protection at the 95% level. So that means current ETH price is 1,800. If it falls below 1,710, I'm protected at that price. Say I want it to be 150 days. The estimated premium is $70.52. The protection value, that's the amount being protected. And so then I say next. Then it's going to give me a bump incentive for doing this. And I'm going to confirm, and bam. So there would actually be some signatures in your wallet in order to confirm it, because this is happening on the chain. So this is a good simulation that people can start to see what happens. So essentially I would have ETH protected at 95% of the price of its current price. It's currently 1,800. So if it falls below that 95% price, I can cash it back in for essentially $1,710 per ETH that I protected. And so it's a new way of protecting downside risk that is much less expensive than options. So Jonathan said in our recent interview that Black-Scholes is the standard, but options desks and protecting using options is much less efficient than what Bumper is showing to be. And so big funds and everything, they're going to be looking for how to protect their funds at the cheapest way possible with the best type of protection. And I think this is where Bumper innovates, right? And I like their name Bumper because if this concept takes off, people just say, hey, bumper it, right? So, bumper your Bitcoin, bumper your ETH, or whatever your asset is. And so it's a good name that can be used. And a bumper, what does a bumper do on a car? Well, if you bump into something, it protects. And so if you just barely bump into somebody, it doesn't do any damage to the vehicles. And so bumper is just kind of like a protective wrapping that you can put around things. So good name for a good product. This price action is interesting. I want to show the price action. Real quick, I'm going to change it to this. So 8.5 cents right now. Look at this nice rounded bottom like this. That's really exciting to me. So we did have this recent spike up tremendously. All of a sudden it shot up from under 8 cents to like over 11 cents. And I was like, crap, because Bumper is something I'm accumulating more of. And so I'm very happy with this retracement because it's still in an accumulation zone for me. Their market cap is under 8 million presently. Fully diluted market cap looks like about 1/3 of their tokens are in circulation. So yeah, I'm really happy at this price. I'm happy that we have a strategic relationship with them. I'm extremely picky on who I allow for strategic relationships. I get reached out all the time and say no almost all the time to almost all of them, because I only want projects that I feel have amazing potential, and Bumper definitely fits that for me. So yeah, for me at this price, it's definitely a buy. Maybe I'm biased. I hold a bunch of this. The strategic relationship I agreed to because I really like them as a project, which is why I've invited them on multiple times on the channel for free. That strategic relationship does give me Bumper tokens to give away on our Friday live streams. I'm not certain whether I'll be able to do one this Friday. I have some family events going on. I will definitely be doing the pre-stream with the Patreon members, but I don't know if I'll be doing the live stream after. If I can, I will. If not, it'll be next week, and we'll be giving away 500 Bumper tokens and a bunch of Wand Chain, which brings up, let's look real quick at the Wand Chain chart, and then just we'll shoot over to a few suggestions made by the audience.
Yeah, I like the little tool where you can have a play and see the different scenarios. I think that's really useful, because that would actually answer a lot of questions about how it works for me. So yeah, I'm going to definitely have a look at it, and I understand a bit more now, given that single example of what it's doing and how it's doing it. So you have a certain amount of days, and it protects you at 95%, etc. So that's really interesting. And it's, if you look at where it is for the potential where it could go, it's, again, fundamentally, I suppose that's a very interesting project. But Wand Chain, similar situation as some of the other markets that we've seen. It looked bullish here when it broke out. It had this really nice breakout, but it ran into this resistance. I know we've talked about this before, but it's in this range again. It's come back into some markets, they just like to oscillate around a central point for a while, and it's a little frustrating. But on the upside, this could well be a basing pattern that when it starts to run, it will really run. But it may not be over as yet, especially given that we're in this August period. So for me, it's a wait, but I do like it longer term. And the closer it gets to breakout velocity, if you like, and 25 cents is the first trigger point, and then this 33 level, which is so important. The closer it gets to those trigger points for me, the more excited I get. But it's important to keep it on the radar, see what it's doing. But for me, it's still in this range. But I'm expecting this to go with everything else, because it's one of the more highly favored consolidating markets, if I can put it that way. We just need these specific breakouts to happen before technicals can confirm buying it.
Yeah, I have a very different feel on this same chart. To me, I really like where this price point is. For me, I find buy zones, and I like within certain price points. And to me, this is in the buy zone. It's not my favorite point on the buy zone, which is that lower trend line. But oftentimes it hits, the bottom of the trend and then comes up off of it. And it does look like a W is forming. And with the W, you see a higher low on that second downturn. It is close to that. And so for me, this is well within the buy zone. I think it's been oversold and greatly punished during the bear market. Now, way back shortly after it launched, it hit almost $10, even though it's not fully reflected here. It's all the way down at 20 cents. So it was down 98% from its high, which is great. In the last bull run, it did only go up to $2.40, but a lot of their cross-chain technology was not rolled out yet. I have been using the One bridge, and prior to them really getting their One bridge, I used other bridges to bridge funds from, say, Binance Smart Chain to the ETH chain or to Polygon. I now that their bridge has so much working, I use One's bridge exclusively for sending funds across chains, and I find it easier, simpler, faster. And so to me, it's better in every single way. And I'm really excited to see it roll out. And you can go to one of the places I like to keep tabs on them the best is on Twitter or X, as it was recently changed to. But One Chain, I like to follow them on Twitter and what's going on, because Tim, their chief marketing officer, does a great job at keeping everyone really updated on all this stuff. Look at this, Cardano bridges and interoperability coming. Like, there is a lot of cool stuff coming with One Chain. And so I love the price. I think it's been overly punished. It's been out of the spotlight for a long time. And I like to buy good, solid projects with teams that I really believe in when they're out of the spotlight, not when they're in it. And then when they get in it and the price goes crazy, that's when I then take profits. That's worked really well for me, not just in crypto. Before crypto, that's what I would do in real estate. And I would buy when it was boring in real estate, and I would hold till it was hot. And I learned some of that through some painful experience and paid the price in real estate. When I first came into crypto, I thought the same rules didn't apply, that crypto was different. And then I learned painfully that the rules are exactly the freaking same. It's just got a quicker market from top to top. Like, it's a very compressed time frame over 4 years from the top of the market to likely the next top of the market. And it's highly volatile. So massive swings, which means you can buy really low and sell really high if you're doing it right. That's exciting to me. Let's jump over and grab the top pick that came in right away, which was ANKR from Mickey the G, who's been very patient.
Sure thing. So you want to look at ANKR, yeah?
Yeah.
Right.
Well, you're pulling it up. I've got it here. Let me share. Whoa. There we go. ANKR, its market cap's 242 million. It looks like everything's in circulation. And okay. Well, it hasn't even gotten close to retracing to its previous bear market prices, but it is down about 80% from the highs. What are you seeing on your chart?
Yeah, I mean, it's again, it's one of these right in the middle, a bit like One Chain and some of the others. It's balanced. The big picture upward trend since the 20th of March 2020, sorry, and then it's been coming down since 21. But the overall bias for me is to the upside, because that's the nature, the macro nature of the bigger picture of all the markets. So for me, where it becomes interesting is when it starts to approach this central point here. So see this massive level. So I know it's only 5 cents, just over 5 cents, but 1, 2, 3, 4, 5 times that got hit. So support, 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 resistance, resistance. If it breaks that, off we go. And that's a doubling move if it gets even to there. So at the moment, whilst it's not really doing a whole lot, my question is, when I look at a chart here, is am I about to miss something? Like, do I need to buy this now? And if it's in a range, the answer is usually no. But I also have to put these tripwires in because it can go from boring to suddenly soaring, and I need something that it identifies that for me. And in this boring environment, as we were saying, just to come full circle, that's where you do this sort of research to say, well, look, okay, if it takes out this 2.8 cents level, then that's a key point. Then the next point will be around this 4.5, and then we're going to 5. So those are the points where I would like to be buying. And as I say, if we can get through this resistance point, it's absolutely massive. And that would take us to the new high, which again is very well defined. And we've seen other markets go through levels like that. Now, this isn't a prediction to say it will definitely do it. I'm just saying it becomes, that's how you see trend following, where the market becomes more exciting as it's getting through these important levels. So you see it on other markets where they smoothly move through the highs and they trend for a long time. That's where I would get more excited on this one particularly. But yeah, it's, from a technical point of view, it's a really nice chart. I really like it because there's so many key levels and they're very clearly identified. But right here, right now, I'd have to say it's a wait. But good that we look at it, because I want to look at it again. If we don't look at it in the next few weeks, I want to look at it again. So please remind us.
Yeah, I like where the chart's at too. And for me, if I was looking to accumulate this, and I like the market cap for what the project is at 242 million, it would be like a small buy that I would just be purchasing a little bit. Obviously missed the lows at, below 1.8 cents. That's okay. You don't always catch the bottom. In fact, you don't often catch the bottom. So it's still a good buy at this price. And it looks like it's forming a W with many other projects in this space. Yeah, I like it. I think massive funds are going to redirect towards crypto. It's been severely punished by the bear market. It's been out of most people's minds. Most people aren't talking about it. The searches on Bitcoin are way, way down. And these are points that I like to accumulate. I like to buy when it's boring. And then when it's hot and everyone's coming in and it's the best thing in the world and everyone's talking about it, and then I'm like, okay, sell point. And maybe if Bumper is available on multiple products, like one of our questions was, do you think, that wasn't the question, about, do you think we'll be able to bump our OMI during the bull run? I can't say I know. That would be great if I could, because that would allow me to lock in a price protection point and explore further upside. And then if it reverses on me, I can cash it in and at that protected price, because if I protect it, say the 90% level or the 95% level, while being able to explore further upside, I love that option, because altcoins can reverse massively. So taking a 5% loss or a 10% loss versus say a 50% loss is awesome. That also allows me not to have to take as much profits along the way. I could just protect the downside. So, I hope Bumper is going to be releasing their mainnet soon. I hope it goes really well. And then I hope they can expand to other tokens and hopefully even on other chains, because ETH gas fees tend to get pretty crazy during the bull market. But they wanted to launch on ETH because it's the most developed, most secure first. And then they could actually, I think it'd be pretty easy to expand to some of the layer 2s and other things. So let's go Bumper. I'm really excited for what they're doing. Let's see, there's really good questions all throughout here. We won't be able to get to any other charts. What do I think Illuvium IMX get to in the bull run? Illuvium's previous high was 1,800. It's been trading under $50. Will it get to its previous high? My guess is it will, and probably surpass it. Not surpass it by a lot, maybe 2x or 3x its previous high. It got pretty pumped during that bull market, and it's pulled back nicely. I like Illuvium. Immutable X has a good future, I think, too. And I like Immutable X where the price point is. So I'm going to be buying that. I did have some because I was an early buyer in Gods Unchained. And I sold it because the charts looked like it was going to get punished. And it has. And now it's at a pretty good buy level for me. So it's on my radar to pick up, get back into Immutable X. So great questions. Web Zombie says, Juan plus ADA bridge getting big hype. Yes, as it should. That is a big deal. Eli says, up to 25K bump tokens, was hoping to have 100K, but the price has risen. No Bitmart for US users, right? Yeah, pretty much Uniswap. So they did just get a central exchange listing on Bitmart, which is cool. I don't use Bitmart. I don't know if it's allowed in the US or not. I haven't actually used that exchange, but probably it's the first of, over time, the best value comes when you can't buy it at hardly any exchanges. And then as it gets listed on more exchanges and on the bigger exchanges, well, then often the price ends up pumping a lot because a lot more users can easily get into it. So I don't see it as a downside that it's not on exchanges now because the price is really, really low. And by the time everyone's talking about it, it can easily get on Binance and Kucoin and maybe even Coinbase. Well, by then the price will be much, much higher. So that's everything I have. Paul, did you have any closing thoughts? Any other thoughts?
No, not really. Just just buy when it's boring, sell when it's soaring. Maybe we should get the t-shirt.
Sell when it's soaring. That's beautiful.
There we go.
Yes, that is from Paul. I might have to use that because that makes a very nice rhyme and completes the thoughts.
Cool.
Well, thank you, Paul, so much for your time and for joining us. We will see you next Tuesday.
My pleasure. See you then.
Also, you can always
guys.
shoot whatever questions you have, and I will shoot them over to the team and probably get you answers. So just telegram me whatever questions you have.
Fantastic. Thank you. We'll do
All
that.
right.
Excellent.
Thanks, Paul.
Thank you. Cheers. Bye.
Well, the crypto market is likely bottomed. Good decisions made during these pullbacks lead to life-changing ones when the market turns around. If you haven't already, take the Zero to Crypto Hero course. The link is in the description to help you align your thinking correctly. Learning to think strategically like an investor does not come naturally. These principles, when they're applied, they will save you a lot and make you a lot over what the course investment is. Yes, and there are still some promo codes. If you use the code Rainmaker, all in lowercase, you'll get half off. This wrap is for all of you to reinforce the principles that I share that make all the difference in higher returns. And I just say I share them because I didn't create these principles. These principles have existed long before me. It's just all my experience in real estate investing and then crypto investing. So real estate investment was over 20 years, crypto 6 years so far. It's just these principles of investing ring true, even especially in the crypto space. And so this is how smart investors that hold for longer periods, this is how they think. And this is just fun ways to think about it and to reinforce them. Thanks so much.
To the space, chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, you buy before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that. And I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. The principles are simple, to leave in a lot. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future. future, learning the past makes it time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how, cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, but time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, say the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past makes it time fly by, years going so fast. This game plan is mine, I'll own it now. When I reach the top, haters asking me how, cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Haters be hating, but time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.